jumping straight into Oklo today. I mean, everyone is watching the high volatility, the recent price action.
Oh, absolutely. That 300+% rally in 2025 got everyone's attention.
It did. But the real story here, the one we want to unpack, is its position right at the center of the advanced nuclear movement
Exactly. It's all about that regulatory moat they're trying to build.
and tying their entire future to the just insatiable demand for AI data center power.
You're tuned into the Easy Money Show, where we make sense of the market's biggest moves, and we try to simplify these really complex narratives like advanced nuclear tech, so I'm glad you're with us.
If you're enjoying the analysis, make sure to subscribe and hit the like button. It really helps us bring these breakdowns to you, and definitely let us know in the comments which stock you want us to simplify next.
All right, let's look at the bull and bear case for Oklo right now. We have to start with a fundamental reality check.
Okay, so before we get into the dream, what is Oklo today, financially speaking?
It is, let's be very clear, a pre-revenue development stage nuclear company.
Pre-revenue, so $0 coming in the door.
$0 in trailing 12-month revenue. They're just posting ongoing net losses. The last quarterly report showed an EPS loss of negative 20 cents.
And that missed estimates, right?
It did, which just flags the biggest risk here.
Hmm.
Timing, execution.
So any meaningful revenue is, what, years away?
The consensus on the street is late 2027, maybe even early 2028, before they see real commercial power revenues.
Wow. So the stock's value today is tied completely to future potential, to milestones.
Entirely. It's a story stock, pure and simple, not about current cash flow at all.
That sounds like a terrifyingly long runway. I mean, building reactors, going through NRC licensing, that takes billions. How are they funding this?
And that is the critical question. It's the factor that mitigates all that pre-revenue risk.
Yeah.
Have a remarkably strong balance sheet.
From their IPO and capital raises.
Exactly. We're looking at roughly $1.2 billion in cash and marketable securities.
$1 billion. Okay, that cash isn't just a number, it buys them time.
Precisely. That's a multi-year runway right there. Their cash burn is projected somewhere in the, 65 to 80 million a year range?
So they're cushioned. They can survive the long build cycle.
They can. And they're effectively unlevered. It's all equity, no debt pressure.
Okay, so they bought time. But cash is only useful if the tech is revolutionary, right? Which brings us to the bull case.
Yep.
What makes their reactor design so special?
So Oklo's whole moat, their advantage, is its proprietary fast-fission reactor technology.
The Aurora powerhouse.
Right, the Aurora powerhouse and the Pluto reactor concept. The simplest way to think about it is that traditional reactors use slow neutrons and are under extremely high pressure.
Light water reactors.
Light water reactors, yeah. Oklo's design uses fast neutrons. And crucially, it's liquid metal cooled, and it's not pressurized.
Which makes it simpler.
Safer, dramatically simpler. You remove the need for that high-pressure containment, which is a huge safety benefit. But the real game changer is the fuel.
This is the plutonium and recycling angle.
Right. It's designed to use plutonium as a bridge fuel, and its big focus is on nuclear fuel recycling.
And that's the economic advantage.
It's a massive one. Some analysts suggest this could cut their fuel costs by 30 to 50% compared to traditional reactors.
30 to 50%, that's huge.
It's a huge operational advantage decades from now. And that IP, that technology, creates a very high barrier to entry.
Okay, so the tech is the engine, the market demand is the fuel, and they are laser focused on AI data centers.
It's the perfect match. AI needs two things: base load, 247 power.
Not intermittent solar or wind.
Exactly. And net zero goals. Oklo's small reactors are perfect for that.
And the customer pipeline reflects that, right? I saw a note suggesting it's already over 14 gigawatts.
That potential pipeline is staggering. And that's what's driving the stock. It's what feeds management's incredibly ambitious long-term forecast.
What are they targeting?
Over $21 billion in revenue by 2038.
21 billion. That sounds astronomical for a company with zero revenue today.
It is. And that's where you have to be cautious. That number represents the total optionality, the dream, if they execute perfectly over the next decade.
And a big part of that execution is the regulatory side. That's the biggest hurdle for any nuclear project in the U.S.
Absolutely. The regulatory lead is everything. And we're watching the NRC, the Nuclear Regulatory Commission.
Which is usually painfully slow.
Historically, yes. Years for approvals. But with Oklo, they seem to be on an accelerated timeline.
I saw they got their principal design criteria approved in just 15 days.
15 days. That's unheard of. And it positions them as a potential first mover in this space, still targeting that 2027 deployment.
And they're not going it alone. They have serious federal backing.
Very significant. They were selected for the DOE reactor pilot program. They have partnerships with national labs like Los Alamos.
Which de-risks the science behind it all.
It validates the tech. It helps them with fuel development, testing. It's a huge advantage.
Okay, so if the tech, the market, and the politics are all lined up for the bull case, we have to talk about the risks. What caused that sharp pullback in the stock price?
Two big things. First, it's simply the regulatory and execution risk.
Timing.
All about timing. Since the value is all in the future, any stumble, any delay gets magnified in the stock price immediately.
So what's the next big milestone everyone's watching?
The big one is the NRC draft safety evaluation. That's expected in the second quarter of 2026.
And if that's delayed?
If that gets delayed, or if the NRC comes back with major revisions, the market will reprice that 2027 target, and you'll see volatility.
Okay, that's risk number one. What's the second one?
The second one is more about financial mechanics, dilution, and insider noise.
This is the ATM program.
Exactly. The one that caused a lot of recent pain. Oklo has a $1.5 billion at-the-market equity program.
Which basically means they can sell new shares into the market whenever they need cash.
Right. Gives them flexibility. But for you as a shareholder, it's a continuous dilution risk. It's an overhang. You know they can and probably will tap it.
And this was made worse by some big insider moves.
Yes. We saw co-founders transfer over 15 million shares. Now, a lot of that was internal for estate planning, moving to trusts.
But the market doesn't care about the reason. It just sees the size.
It just sees a move valued around $1.1 billion.
Yeah.
And it gets spooked. We saw 3 to 5% daily drops on that news alone.
So you have this huge run-up, then a 42% pullback because of dilution fears and timing risk. What does that say about market conviction now?
It says the short-term mood is nervous, but it also suggests a lot of these risks might be priced in now.
You think so?
I do. I mean, analyst average price targets are still significantly higher than where we are today. And the real anchor here is the institutional ownership.
How high is it?
It's extremely high.
Right.
Around 85%.
85. So the big money is holding on.
The big money is looking past the near-term noise. They see that $1.2 billion in cash as a buffer. They're invested in the 2038 dream, not the day-to-day chatter.
Okay, let's make this actionable. For anyone following this story, what should they be watching over the next, say, 90 days?
Two critical things. First is earnings. The next report is late March 2026.
But revenue will still be zero, so what's the focus?
The focus will be entirely on their cash burn rate, how fast they're spending that $1.2 billion, and any updates on their project timelines.
And the second thing?
The second is regulatory news. Any update on that NRC draft safety evaluation is huge.
And fuel.
And any news on a potential DOE plutonium allocation announcement. Those are the big binary catalysts that can move the stock overnight.
So that's the lowdown on Oklo. It's sitting right at this junction of infrastructure, tech, and just explosive AI demand.
The whole story is about turning that cash-rich concept into a fleet of working reactors.
It is. It's a multi-year journey of milestones. And that leads to the final question for you to think about. How heavily do you weigh the certainty of that $1.2 billion in cash they have today
against the massive uncertainty required to hit that potential $21 billion revenue dream?
Exactly. Your answer to that really determines your risk appetite for the future of advanced nuclear. If you haven't already, subscribe so you don't miss our next breakdown. We'll catch you on the next one.